Hey, welcome back to YT Finance, and this is the channel where I went to business school so you didn't have to, and today we are talking about Sofi Technologies SOFI stock, and we're going to compare Sofi Technologies to another similar company such as Upstart. Now, I personally like both of these companies, but to me, one company is slightly better than the other. We're also going to go over the latest Sofi stock news updates, and why so many fantastic stocks like PayPal, Roku, Meta Platforms, and even Block are falling in the stock market right now. So for more videos like this one, remember to go and smash that like button right now, subscribe if you are new, comment your thoughts down below on Upstart, Sofi, Roku, Meta Platforms, or Block, and without further ado, let's jump right into today's stories. So the article says that it's not surprising that younger stocks that have recently gone public within the last 3 years are falling right now due to a multitude of investors taking their money out of growth stocks and putting it into either value stocks or bonds. If you didn't know, Sofi Technologies is a fintech company, and they offer an all-in-one inclusive app that basically offers anything someone would need in terms of financing. They have student loans, home loans, mortgages, insurance, investments, checking accounts, savings accounts. You can buy and sell crypto, you can buy and sell various stocks, and overall, it's a very intuitive company and app. Sofi Technologies currently trades at around $11.25. The low-end analyst price target for the next 12 months is $16 per share. The average price consensus among analysts is $18.77, and the high-end price prediction is $25 per share. Out of 11 analysts that I studied, 8 of these analysts say to buy Sofi Technologies SOFI stock, and 3 of them say to hold them. However, none of these 11 analysts say to sell the stock or that the stock is going to underperform. So why is Sofi stock falling right now? Well, I would like to point out that other companies and stocks that are much larger, like Roku and Meta Platforms, are also falling even though they had decent financial reports. Now, it would make more sense that Sofi stock is falling independently, but they're not. The entire market seems to be pulling back right now, and this is actually really good news for early investors into Sofi Technologies because their management is still trying to carve out a niche market inside the consumer fintech space. We also see other stocks like PayPal also falling recently, so of course you would want to get some of these blue chip stocks at a very cheap price because that's what I am doing right now, but I'm also going to start nibbling more at Sofi Technologies, and I'll tell you why. Some of the recent bearish news around the market recently has presented a fantastic buying opportunity. You've probably heard the term buy the dip, and that's exactly what I am doing right now, including buying more Sofi Technology stock. So although a multitude of fantastic stocks are trading at a discount right now, I am buying a well-diversified portfolio and a plethora of various companies. I'm also starting to nibble at Sofi stock and lower my average cost for it. Now, Sofi is by no means cheap because it does trade at a price to sales ratio of around 18, which is rather expensive. Ideally, we would want this at around 12 or lower. But if you are a long-term investor in Sofi Technologies, the stock could more than grow into this valuation. The company's website actually lists 10 opportunities and segments that Sofi Technologies wants to integrate and penetrate into, which would just increase their overall revenues and profitability, which they're supposed to reach between 2024 to 2025, which is relatively soon, especially if you are a long-term investor. Block is also another fantastic company that is falling for no real reason, along with Meta Platforms, PayPal, and Roku. Another stock that I would want to point out is most likely Twilio because I also love Twilio stock and I'm starting to nibble at that more. From a fundamental perspective, none of these companies that I have previously mentioned are having business problems. They are all performing either adequately or even above average, yet the stock price is still falling. So we see a huge disconnect from what the stock, which is supposed to represent the company, is trading at and what the company actually fundamentally and foundationally is operating right now. And to me, this just gives us a better buying opportunity in these companies because from a company standpoint, these companies are still doing very well, even though investors and the psychology of investors want to take their money out of these companies right now, which to me allows us to have a fantastic entry point, or at least a chance to average down our average cost. However, specifically for Sofi Technologies, the stock is pretty much stuck between a rock and a hard place because although the company is scaling pretty nicely, the stock will continue to fall and it could easily fall below $10 at its current rate. So adding a little bit more of SoFi Technologies now and then, but again, not overexposing yourself more than 5% to a single stock because that would be bad risk management, could be advised right now. But what about other companies that are somewhat comparable to SoFi Technologies, such as Upstart? And we'll talk about and go into more detail about what Upstart does. So there has been a multitude of companies that are creating apps and applications that act as one-stop shops to fill a consumer's financial needs. And specifically for Upstart and SoFi Technologies, they get the bulk of their revenues from loans. We're talking about student loans, home loans, auto loans, insurance products, and even general available credits, including personal loans. The reason to be bullish on both of these companies is that the personal finance sector is expected and anticipated to grow at a projected compounding annual growth rate, also known as a CAGR, of around 23.1%. Anything above 20% is a pretty good CAGR. And this is specifically referring to the growth of the company, their market, and their overall revenues that they're anticipated to bring in. So both of these companies, Upstart Holdings and SoFi Technologies, are two fantastic fintech companies to own. However, we're going to use what TipRanks thinks of these companies and their comparison tools, along with what Wall Street investors think about these stocks, to determine which of these stocks are a better buy right now. So I already gave an introduction and an intro for SoFi Technologies, so I want to hone in on Upstart Holdings right now, ticker symbol UPST. And Upstart Holdings has a fantastic business model where they use artificial intelligence to determine who should actually receive loans at what particular rates. And this is proprietary technology that they are using on their lending platform, and it has done absolutely phenomenal. This has been so successful that Upstart has actually had triple-digit revenue growth of around 252% year over year, and posted revenues of around $305 million in Q4. So clearly their platform works, and their artificial intelligence is being much more effective compared to something else such as like a FICO score, which lenders use to determine if they should give money to a certain individual, company, or business, and at what interest rate they should charge them. Upstart Holdings also gains revenues from charging referral fees to banks for every loan they refer through Upstart.com's website. The CEO of Upstart Holdings says, "I am also happy to report that with help from an epic push by our team in the last few weeks of the year, auto loan originations on our platform are now ramping quickly and will provide growth opportunities to Upstart for years to come." So clearly Upstart Holdings and SoFi Technologies are both in the lending space. So it really comes down to what are the margins on these loans, who is more effective and efficient at giving out the loans, and at what interest rates are these companies issuing their loans. Now the interest rates are a double-sided sword here. Now if they charge a larger interest rate, yes, they will get more money from the people actually using and borrowing money from these institutions. However, if the interest rate is too high, the person that is seeking credit or a loan will actually just use a company that has a cheaper interest rate. More good news about Upstart Holdings is that they had an earnings call in Q4 for their revenues, and they are projected to bring in over $1 billion worth of revenue on an annualized basis, which means that yearly they're going to be obtaining over $1 billion worth of revenue. On top of that, their adjusted earnings came in at around 89 cents per share, which is significantly higher than what analysts originally projected, which was only around 51 cents per share, which is phenomenal news. This is a very impressive EPS, especially compared to SoFi Technologies. Also, the company anticipates that they will bring in around $1.4 billion worth of revenue for the full year of 2022, which would represent a growth rate of around 65% year over year, which is extremely bullish. This is echoed by an analyst from Wedbush that actually anticipates and forecasts their revenues to be more around $1.36 billion, which would equate to around a 50% growth rate. But regardless about which revenue projection or forecast that we use, both of these are phenomenal news. Now that I've gone over all of the good news for Upstart, now let's talk about some of the drawbacks. Another slight drawback is that analysts point out that Upstart's loan underwriting model has not yet operated through a true recession. This basically means that Upstart, of course, is doing very well right now when there's a plethora of money floating around because of the Federal Reserve printing out so much money recently. There is so much money circulating that, of course, models like Upstart's is going to be working very phenomenally. However, if things ever switched and we went into a recession, we don't know how Upstart would fare in an economy like that. And because of this, one analyst has a hold rating for Upstart at around $110, which would actually indicate around 25.7% downside from the stock's current price. However, Upstart's UPST stock currently trades for $127, while the low-end bearish analyst price target is $100, the average price consensus is $200, and the high-end price prediction is $350 for the stock. 7 analysts that I studied say to buy the stock, and 3 of them said to hold it, and none of these analysts that I studied, 10 in total, said to sell the stock. So overall, this is a decent long-term investment. However, how does it compare with SoFi? Well, let's first finish going over their price targets. So according to Wall Street, they are cautiously optimistic about this company and stock, and they rate it as a moderate buy rating. The median price target, which is around $213.33, implies around 44.1% upside from the stock's current levels. Because remember, this is only a 12-month stock price target, so increasing your money by around 44% is not that bad. But on the flip side, we have to see that the stock could still fall because the low-end bearish price target is around $100. So if we compare that to SoFi Technologies, how does Upstart fare? Well, first let's go over the bullish news like I did with Upstart. Well, the most recent bullish news and positive news about SoFi Technologies is, of course, their bank charter, which went through. They are now officially a bank holding company thanks to their acquisition of Golden Pacific Bancorp. And the reason why this bank charter was such a big deal is because now they can lend out their loans at an extremely competitive interest rate. This news is so great, in fact, that analysts have actually reconfigured their forecasts for the adjusted earnings before tax, interest, depreciation, and amortization, also known as EBITDA, specifically for their estimates for 2022, which was originally around $48 million, but because of this fantastic catalyst, analysts have increased their EBITDA to $235 million with even more potential upside, which is fantastic news. This is why analysts have an overall buy rating for the stock and a price target of around $25, which is fantastic news because the current stock price trades for around $11.25 currently, which is also trading below their most bearish negative analyst price target, which currently sits at around $16. Other prestigious institutions such as Morningstar actually has a fair value price for SoFi Technologies of $22 per share. So at minimum, we could anticipate around 26.2% upside from the stock's current price, or for their median stock price target, we could see upside of around 44.2% upside, very similar to Upstart. So if we compare these companies based on their low-end price target and their median or average price target, SoFi Technologies barely beats Upstart. Now, if we use the most bullish positive scenario, Upstart technically would be the better buy. However, both of these are very strong companies, and there's nothing preventing you from investing into both of these companies. However, I am just barely nibbling at Upstart right now, and I have much more money in SoFi Technologies. But with that being said, I would like to inform you that SoFi Technologies does not even make up 2% of my overall portfolio, because I am still waiting and nibbling and averaging down my average cost for this stock, because that is proper risk management. Now, I would love to hear your comments down below between what company you think is better between SoFi Technologies and Upstart. Subscribe if you're new, smash that like button if you haven't already, and I'll see you in the next YT video.